the Monetary Policy Committee, that is MPC, decided by a 5-1 majority to keep the policy rate unchanged at 6.5%. Consequently, the standing deposit facility rate remains at 6.25% and the marginal standing facility, that is MSF rate, and the bank rate at 6.75%.
In its sixth bi-monthly policy announcement, the Reserve Bank of India under Governor Shaktikanta maintained the benchmark interest rate at 6.5% for the entirety of the financial year 2023 to 2024. This decision, consistent with market expectations, marked the sixth consecutive time the rates remained unchanged. The Monetary Policy Committee, headed by Das, also held the standing deposit facility and marginal standing facility rates steady at 6.25% and 6.75% respectively. The MPC, with a majority of 5 out of 6 members, reiterated its commitment to focusing on the withdrawal of accommodation to align inflation progressively with the target of 4% while still supporting growth. This stance aimed to address uncertainty surrounding food inflation, with retail inflation rising to 5.7% in December 2023, primarily due to food inflation, notably in vegetables. Despite a robust domestic economic activity, the RBI projected a real GDP growth of 7% for financial year 2025, slightly lower than the 7.3% projected by the National Statistical Office (NSO) for the ongoing fiscal year. Quarterly GDP growth estimates for financial year 25 were provided with projection of 7.2% in quarter 1 and 6.8% in quarter 2, 7% in quarter 3 and 6.9% in quarter 4. Regarding inflation, the RBI retained its CPI inflation projection at 5.4% for financial year 24, with a downward revision for quarter 4 to 5%. Looking ahead to financial year 25, CPI inflation is projected at 4.5%, with quarter 1 at 5%, quarter 2 at 4%, quarter 3 at 4.6% and quarter 4 at 4.7%. The MPC's decision aimed to ensure stability in inflation while supporting economic growth, aligning with the government's mandate to keep inflation within the 2 to 6% band. The RBI highlighted its proactive liquidity management efforts, addressing liquidity deficits through various repo operation amid increased government spending. Overall, RBI's policy emphasized the importance of maintaining macroeconomic and financial stability, with a focus on managing inflation and supporting economic growth amid evolving domestic and global economic conditions.